Right. I hope the first video that I did on chapter 1 and chapter 2 is helping you. I just realized that I did not do bank statement in that video. So this one is specifically for the bank statement. Now, so there are a few things that I want you to understand on how these bank statements are produced. Bank statement. There you go. Now, so let's say we have a scenario whereby Sandra, right? So Sandra took a loan. Sandra took a loan. Sandra took a loan. Let's say took a loan from Absa. Sandra took a loan from Absa. Sandra took a loan from the Absa, and the details are as follows. Okay, so we've got Sandra took a loan from Absa and the details are as follows. Okay, so we have got debt, right? And the date is the 1st of January 2016. We have got the amount that Sandra took, and the amount is 100,000. The round sign there. Okay, and then the number of years which Sandra must take to pay this. Let's say it is 10 years. And then the interval for our payments. That is monthly. Okay, so we've got a question where Sandra took a loan from Absa and the details are as follows. Date is 1 January, amount 100,000, period 10 years, payments monthly. And then of course the most important thing, interest rate. So the interest is let's just say 12% per annum, right? Compounded monthly. Okay, compounded monthly. Okay, now remember what I said in my previous video, that when payments are made monthly, also interest must be compounded monthly. So we are good to go. Now I want to show you how a bank statement is done. So let's come here and prepare bank statement number 1. So let's prepare our statement number 1, statement 1. Okay, now I'm going to skip some other things that are not important. I'll go straight to the figures part, because that's where the problem is. So we start with the payment number, right, and then we move on to the description. Okay, the description. Sorry, the a description, okay, something like that. Okay, then we move on to the date or the effective date. Some people say effective date, and then the amount, and of course the balance. Okay, so on the 1st of January, so let's see, let me split this. So let's use this one here to draw that line, and then the description, of course, is the one that's a bit bigger, and then the date, it's not that big, and then the amount, of course, and the balance, we split that into two. Okay, so there is a bank statement. All right, now, so we start with the very first item, which is our loan. So since it's our first statement, so there you go, the loan, which was effective on the 1st of January 2016, and the amount is 100,000, right? And the balance also is 100,000. Now, there's one thing that I forgot to add on that first page that I wrote about the loan. Let's say this bank, Absa, they charge a monthly fee. So let's add something here. Let's add the monthly admin fee. So, or if you want, you can call it a bank charges, or yeah, let's call it monthly admin fee for Absa. Let's say it is 50 rands, right? Okay, so once you have that loan, you must pay that monthly admin fee of 50 rands. Okay, so at the end of the month, at the end of January, so that will be on the 31st of January 2016, right? Absa is going to add interest, right, to your loan account. So that is called monthly debit, right? Or that's the finance cost. Now, the interest now, as you all know, interest is equals to A times I times N. Now let's see. Our opening balance is 100,000, which is the A, multiplied by our I is the 12%, right, which is 0.12, right? Our N, remember, interest is at the end of the month. It's only 1 month, so it's more like simple interest. A times I times N. So your N will be 1 divided by 12. Because remember, this rate here is an annual rate. So we are now finding interest for only 1 month. That's why we divide by 12. And the answer is 1,000. So we are going to add 1,000 there. Right? So if you add 1,000, your balance now will now change to 101,000. So your balance is now getting bigger, right? Okay. Now let's move on to the next line, which is again at the end of the month, which is still 31 January 2016. Absa is going to add the monthly admin fee, right? So admin fee or bank charges, whatever you want to call it. So admin fee is 50 rands. Of course, your balance will also change to 101,050. So I've simply added this 50 rands. Now, let's now calculate now how much should we pay. How much should we pay per So I'm going to use the same page here. I'm going to create some space there. Okay, so quickly let's read. The loan is 400,000, so definitely your 100,000, it becomes your plus minus present value. Then of course we've got your N. Then of course we've got the I. Then of course we've PMT. Okay, so the N, remember, is 10 years, but payments are monthly. And remember what I said in my previous video, N are the number of payments. So in 10 years, right, I multiply by 12, that gives me 120 payments. Then my I is 12% divided by 12, was compounded monthly. There you go. So quickly let's compute our PMT. So 100,000, right, plus minus, that's your PV. Then 120, that's your N. And then 12 divided by 12, or just 1, right, that's your I. Then compute PMT. So you see your answer now is 1,434.71. But I want you to remember this. When you go to the bank, you are going to give them 1,434.71 in order to pay your loan. But if you only give them this one, guess what? You will be owing at the bank at the end of the 10 years. You come to the bank, there will be still a balance. Why? It's because whenever you paid 1,434, they took 50 rands as admin fee, and the balance was transferred to our loan. So to avoid that, we are now going to pay this one, then we are going to add the 50 rands for the admin fee, right? So that it's now 1,484.71. So you see now, if you only pay this one, then you'll be in trouble soon. So rather you pay this one for the loan and the 50 rands for the admin. So in total every month you are paying 1,484.71. Okay, so let's go back to our bank. And for those who are using HP, let's see. So make sure it's at 1 per year. Now some people, they prefer to set. Now if you are setting, it will be 12, then shift, then PMT. There it is 12 per year. But for me, I don't set, so I always leave it at 1. All right, so mine is at 1. There you go. So let's go. 100,000 plus minus, that's my PV. 120, that's my N. 12 divided by 12, that's my I. Compute PMT. 1,434.71. And of course, remember to add the 50 rands to get 1,484. So that's how much should go to the bank. Now let's come here now and write at the, that's now your payment number 1. So payment number 1, and this is your installment. That's your installment. Okay, when again is at them 31/01/2016. How much is it? We did work it out there, and it was 1,484.71. And we know that in this amount there's 1,434 for the loan and there's 50 rands for them for the admin. Now if you pay this, guess what? The bank would take 50 rands to the admin, and you now remain with 1,434, which is exactly what is required as per our loan calculation there. So your balance now becomes sorry, I made a mistake. This is not 105. Sorry, my apology. It's 101 there. My apology. It's 101. So it's now 101, 101, right? 050. Okay, and then we subtract the payment of 1484.71, and that gives you 99,562.29. So this is the balance at the end, right? This is the balance at the end. That is the balance at the end, 99,562.29. Now, next month, again, it's going to be the same thing. So let me use a different color for you to at least see what is happening. So again, next month, but now the date will be on the 28th. This year, I think February ended on the 29th. Yes, my apology. So on the 29th of Feb 2016, right? What do we have here? Again, same thing. Monthly debit, right? So let's do the same thing again. A times I times N. But remember, we need the opening balance for February, right? Which is the closing balance for January. So you are now going to say 99,562.29, right? And then you are going to multiply that by 0.12, which is the 12%, multiply that by 1 divided by 12, and then it will give you 995.62. So there you go. It now gives you interest of 995.62, which we need to add again to our opening balance there. So I take my calculator, 995.62 plus 99562.29. There you go. Right, then I add, I get 100,000. I get 100,557.91. Same thing again. We are going to add our admin fee. Our admin. Sorry. I don't know what's wrong with me today. Admin fee. There you go. And then again, same date, 29/02/2016. And how much is the admin fee? It is 50 rands. Now let's add the admin fee there. So we have our balance there. We add the 50. We now get 100, right? 607.91. There you go. Now again, now it's now payment number 2. Now payment number 2. Remember number 1, number 2. So we go there, installment, and then again is 29/02/16. And guess what? Nothing is changing. Just copy and paste. 1484.71 minus, right? And then let's quickly calculate our balance, which is 100,607.91 plus minus 1484.71, which gives you 99,123.2. So it's 99,123.2. Okay, so there is your answer there, 99,123.2 and 20. Okay, and basically this is how a bank statement is done. So when you see the bank statement that you receive from your bank, ABSA, this is how they do it. Obviously, they don't. Most of the times, they use computers like softwares, Pastel, and yeah. So there we go. This is how you do your bank statement. So that's the loan amount there, monthly debit, admin fee, and check this. All these amounts are being added. Right? It's only the payment that is now subtracted. But now where do we get our payment? We have our information here. The loan is 100,000. That becomes your PV. Then it must be paid over 10 years and it's monthly payments. So 10 times 12 is 120. The interest was given here, which is divided by 12. The PMT is 1434.71. But we agreed that, remember, there's a bank charge here, or the admin fee. So 50 plus that gives you 1484, which now becomes your monthly payment. Now it will continue like this. So these two, they won't change. It will remain the same. The only thing that will change is your interest. Your interest will be becoming lesser and lesser. Why? Because as you can see, the balance is getting lesser and lesser and lesser and lesser. So here the balance was 99562. Here the balance is 99123. So you see, it's getting lesser and lesser and lesser. This is how a bank statement is done. Now let's look at a question that is in your task 2, which is question number 9 and 10. Right? So if you don't have a question, it's okay. I have got one here. So we've got a bank statement in front of us. There you can see it. And it's statement number 6. Now, this one has got more information now. So there you see the loan was for 205,000. The original rate, 11.5 per annum compounded monthly. So, of course, we know that our payments are also made monthly. Then the statement date, 21 May, it's okay. The account number, okay, who cares? The remaining term, now if you can see there, it's 208. Where did they get that? You see now. You see, the original term, there it is, which is the 240. Now, it means when the loan was taken, it was supposed to be paid over 20 years. Monthly, 20. 20 times 12 is 240. Perfect. But how many payments have we made so far? So there we are. We've paid 32. So 240 minus 32 gives you 208 as your remaining term. Now let's look at our bank statement. Now this one, of course, you won't see one as like the one that I did. Why? Because it's not statement number 1. It's now statement number 6. So there you see it starts on 1 February with that balance. The next thing is monthly debit at the end of Feb. Right, so there you see there at the end of Feb, and that is the amount of the debit. And as you can see, the balance is now getting bigger. Right, again same thing, admin 1820, balance getting bigger, and installment payment is a negative and is getting that. Now quickly, we want to see, before I go to the question, we want to quickly prove that payment of 2204, right? Based on the understanding that we've done before, let's quickly go 205,000, which is the original amount given there, is a plus minus, that is your PV, and then 240 because it was supposed to be paid over 20 years, so that's your N. Then your I is given there, 11.5 divided by 12, that's your I. then you compute PMT. Now it's 2186.18. But remember, this is the payment for the loan. We still need to add the admin fee. So you see, there you go, 2204.38, 2204.38. There you see it. So you see now, this is where the payment comes from. Is the payment for the loan plus the admin fee of 1820. So this is a bank statement. Now let's go to the question. Let's not waste time on this question. Now, before we go to the question, I want you to remember this. Actually, let me use a red marker, because it's actually very, very, very important. So I want you to remember this. Whenever there is a change, so whenever there is, whenever there is a change, now remember, your change can be either your interest rate can either change, your number of payments can either change, number of payments, right, and your amount can also change, the amount to be paid, amount paid, or the amount of the payments. So whenever there's a change, and change can be the interest rate can change, number of payments can change, amount paid can change, and also there can be a lump sum. A lump sum is also another change. So let's include the lump sum there. So all this is what we call change, right? So the interest can change, the number of payments can change, amount paid can change, or there can be a lump sum, right? Okay, so now let's quickly continue. So whenever there is a change, right, then you need to start your calculations. You need to start your calculations from the beginning. When I say beginning, I don't mean you must go to zero. I mean you must act as if you now have a new loan and new balance, new term, new payment. So whenever there's a change, and your change can either be interest, number of payments, amount paid, or lump sum, you need to start your calculations from the beginning, right? So what do I mean? You need to start again with your new PV, N and I, and yeah. So with this understanding, let's look at the question. So if you check at the experiment that I just showed you now, we are now on number 32. So it means from 1 to 32, nothing changed. It was just the same. That's why you see that the payments were all 2204, 2204, 2204. So because everything was still the same. But we are now told that from 1 May, the rate increased to 15% per annum compounded monthly. Right? I think you can't see clearly there, but it's fine. I'll read the question if you can't see clearly. From 1 May, the rate increased to 15%, right, per annum compounded monthly, right? Okay. Now, so that's a change there. So we know that from 1 May, that was a change, okay? The admin fee also increased to 50 rands per month from 1 May, right? Again, on 1 May, the borrower made a lump sum deposit. Now, that's very important now. Lump sum deposit. Now, quickly, I want you to tell me, on 1 May, you need to ask yourself, what was the balance just before the change? What was the balance just before the change? So we know that on 30 April, on 30 April, right, we had a balance of 196,747.22. But now on 1 May now, we are told that there's a lump sum of 80,000. So it's a lump sum payment. So of course our balance should go down. Right, there you go. There you go. So this is our new balance now, our new PV. When? On 1 May. Remember, it was 196, which is that one, the 196, right, which is that one. But we made a lump sum of 80,000 and a PV. Now, what else changed? And on 31 May, the payments increased to 3,800, right? So, okay, I know it's not clear, but this is 3,800. Okay, so let's now do our calculations. Now, before we go to the calculations, let's look at the question. The question says, compute the interest charged at the end of December 07. At the end of December 07. But remember, let's go back to our bank statement. Now, monthly debit, this one, how did we get this? We took the opening balance. Remember, this is 29 Feb. This is 31 January. So the end of January is the beginning of Feb. Perfect. So we took this one, the opening balance for February. We multiply by the rate. We multiply by 1/12. Good. So let's assume this was December. So do you agree with me that if it was December, we would take the opening balance for December, which is at the end of November? Right? Yes. So let's assume this is December. I know it's Feb, but for now, just assume that it is 29 or 31 December. So of course, this becomes the opening balance for December, the closing balance for November. So, having said that, for us to answer this question, we need the balance at the end of November. There it is, balance at the end of November. But there's no need to be told this. You need to know this on your own without these hints. Okay, so, but remember when the word balance comes into your mind, you have to think of amount. But you can't use amount if there is nothing. So there they gave you all the hints, but again you need to know. Now you don't need to be told that our new balance on 1 May is now 116,747.22. So that becomes your PV. So you are now going to say 116,747.22, right? That is your plus minus PV, right? And then we are also given that the payments are going to increase to 800. So the PMT, it is 3,800 minus the 50. Why? I'll give you a second. Why is it minus 50? Why? Yes, you got it. It's because there is an admin fee of 50 rands. Before it was 1820, but now it has increased to 50. So when you pay the 3.8, not everything will go to the loan, but 50 rands will go to the admin fee. Perfect. So there we go. One more element. Of course, it is your rate. Now we are told that our rate has increased to 15% divided by 12, of course. What are we looking for? The only missing element here is the number of payments. So your N is equals to. Okay, so quickly, let's go. So you are now going to say, okay, I'm going to start with HP and show you sharp. Okay, so I'll start with HP. I'll change this time around. So remember, there are those that set their calculators, but remember, my advice is don't set your calculator, just leave it at 1 per year. So we are now going to say 116 747.22, right? And that is your PV, right? That is your PV, plus minus, that's your PV. Then 3750, that is your PMT, and 15 divided by 12, that is your I. Then you compute your PMT. Sorry, you don't compute PMT, you compute your N. My apology. Let me start again. 116 747.22 plus minus PV 3750, that's your PMT. 15 divided by 12, that's your I. Then compute N. My apology. So your N is 39 point, there you go, 39.6 7 or 68. So 39.6 what, which gives you 40. Now listen very carefully. Even if your answer was 39,00001, we always round up to 40, right? So even if it was 39,00001, we always round up to 40. Yes. Now let's look at the second part. Now remember, the reason why we did this is because we want to know the balance at the end of November. But now there's a problem. Now there's a very small problem. What is the problem? Now the problem is April was number 32, May is number 33. The bank will continue with their numbers, but so May, June, July, obviously up to November, July, August, September, October, November. But this is the bank. They will continue 34, 35, 36, 37, 38, 39, and right? But whenever there is a change, we must start our numbering from scratch. Remember what I said there? What I said, whenever there's a change, you calculate from the beginning. It means you start counting again from 1. So payment number 33 on the bank statement becomes our payment number 1, because it is the first payment after the interest increased. June becomes number 2, July number 3, August number 4, September number 5, October number 6, November number 7. Perfect. So we know that we want to know the balance after 7 payments in this new series. So we've just put 39.6 there. That is your N. So we want to know a balance after 7 payments, which is there 7. So you say 7, then input, then shift amount. So you see it now says 7 to 7. It means you only want to focus on that point. Then you say yes. So you press is equals to, let's see, it gives us the principal that was paid on that 7th. You can't see it clearly, but it's written there, principal. You press again is equals to, it says interest, again is equals to, it now says balance, right? And your balance as you can see there. So I'm going to come here and say amount, amount 7. It means find the balance after 7 payments is equals to, the answer is 100,098,62. But remember, this is the balance at the end of November. Now we can now get interest now at the end of December. So interest is equals to 100,000, which is your A there, right, multiplied by 0.15, which is your I, multiplied by 1 over 12, which is your N. Remember, just like I showed you on the very first part there. So this is equals to, okay, so let's quickly punch this one in our calculator. I'll use my sharp here. So 100,000, 098.62. So that is times 0.15 times 1 divided by 12, and then you get 1251.23. 1251.23. So 1251.23. There you go. And if you look at the answers provided, that is option number D. There it is, 1251, obviously to the nearest rand. Okay, now before I go to number 10, which is the last question, right, let me explain something on our changes here. Let me explain something on our changes. So if you can see here, we are told that the rate changed, fair and fine. The admin fee changed, okay. There was a lump sum, okay. And also the payments also changed. So let's assume that the payments were not given the PMT, right? So I will now take this as scenario A. Now I'm going to look at scenario B. Now in our scenario B, let's use the same information of interest rate increased, right? Okay. The admin fee increased, okay. There was a lump sum, okay, but let's ignore this payment. So there is no payment here. In other words, we want to know the payment. So let's remove the payment. So it's only the rate increased, the admin fee changed, and also there was a lump sum. So how would we do this? So from that calculation of ours, we did that. We did calculate our balance, and it was 116,747.22. So again, this remains as our PV. But now we no longer have PMT now. Remember, I have sketched out PMT. We have got our I, which is 15 divided by 12, and fine. Now we have got our N. So where is N coming from? Remember, in total, we need to make, we must make 240 payments. But how many payments did we make now? 32. It means we are left with 208. And remember, the 208 is starting from May. Check this. This is 30 April, number 32. So month of May, it becomes number 33, which becomes our new number 1. So if we count from number 1, it means we are left with 208 payments. Because if you add the ones that we've paid so far plus the ones that we should pay, it must give us 240. So the missing figure now is PMT. So this is another version of bank statement again, which can be asked. So quickly, let's do this. 116,747.22 plus minus PV, then 15 divided by 12, that is your I, then 208, that's your N, then you compute PMT, which gives you 1578.48. But remember, this is the payment only for the loan. Only for the loan, not including the admin fee. So since our admin fee increased to 50 rands, we add. So it's now 1628 208.48. There you go. So this becomes the new payment. So the new payment without the admin fee is this one. But the total payment now is there. So total. This is for the loan payment. This is for the admin. In total, it is there. So again, this is another version in which you can get this question. So quickly, let's just verify our answer using the HP calculator. So 116,747.22 plus minus PV. 15 divided by 12 is your I. 208 is your N. Then compute PMT 1578.48. That's correct. Right. Now that I've explained this other variation, B, let's now continue with our original question, and now let's go to our number 8. Sorry, it's not number 8, it's now number 10. Yes. Now, this is very important now. So, number 10 now, they want us to compute the total interest paid from where? Interest charged from payment number 1 to payment number 50. Payment number 1 to number, but there's a very tricky part here which I want you to get. Payment number 1, remember I said even if we change our numbering, the bank will not change, they will continue. So we've got number 1, number 2, number 3. They'll move on up to number 50. Up to 50. But I want you to notice something. On payment number 32, which was in April, there was a change. So payment number 32 is somewhere there. So after this part here, going forward, there was a change. So we've got two parts. Although they are going to continue with their numbering, 33, 34, but this becomes sort of like a new annuity or a new loan, right? And also, this also is something else. So, according to the bank, yes, it's number 1 to number 50. But according to us, we are going to do number 1 to number 32, fair and fine. But instead of saying 33 to 50, we will now say 1 to 18. You see, because number 33 is our number 1. 50 is our number 18. How did I get this? You simply say 50 minus 32. Because if in total we want 50, we've used 32 so far. So 50 minus 32 gives you 18. So it's 1 to 18. So these are 18 payments. These are 32 payments. Together, they give you 50 payments. 32 plus 18 gives you 50. Perfect. Now, so we want to know the total interest paid. So firstly, we need to know the interest paid between number 1 and number 32. But you can't just get the interest. For you to get the interest, you need to use the amort function. And as you know by now, you don't get the amort function if you don't put something in the calculator, right? So let's use the original information. Let's use the original information, which is 205,000 plus minus PV. Now remember, the N was 240 when the loan was taken. The I was 11.5 divided by 12, right? And then we compute our PMT. Now I'm going to use both calculators, the HP and the Sharp, but I'll start with the Sharp. Okay, so let's go 205,000 plus minus, that is your PV, then 240, that is your N, and then 11.5 divided by 12, that is your I. Then compute PMT, same answer as we got before, which is 2186.18. But remember, we don't want this one. What we want is the interest between payment number 1 to number 32. So we want the interest between payment number 1 to payment number 32. So how do we do that? You now say amort. You see now, so there is P1. So payment 1 is the first payment. That's perfect. So we leave it like that. We go down to P2. So on P2 now you say 32, then enter. So there you go. 32, enter. Then again you say down. So you see it gives you the balance after 32 payments. But we don't want the balance. Now check this. This balance is exactly what we have on our bank statement, which is this one. You see, 196,747.22. There you go, 196,747.22. Of course, there's a minor difference there. Okay, so now, like I said, we don't want the balance. Again, you go down again. So you see that sign there is the summation sign. It simply means the total principal that was paid is that. But again, we don't want the principal. Then there we go. Perfect. Now we want the interest. So the interest charged for these payments is equals to there 61,704.99. 61,704.99. Right, so this is the interest charge between payment 1 and payment 32. And remember, it must say summation of interest. There you are, from payment 1 to payment 32. Now before I continue to the second part, let's do this part again using HP. So again, remember 1 per year. If it's not 1 per year, it's 1. It's 1. Sorry. It's, if you want to set it, it's 1 shift then PMT. There you go. How do you clear? Shift clear all. Okay. Now let's go. 205,000 plus minus PV. Then 240 is your N. Then 11.5 divided by 12 is your I. Then you compute PMT, same answer as what we got there, 2186.18. There you go. Now you want to know the balance between 1 and 32. So you are going to say sorry, you want to know the interest, interest. So you are going to say 1, then input for payment 1. Then you say 32, which is for this one. Then you say shift amort. You see now, it now gives you, it now asks you, okay, do you want to do 1, 2, 32? You say yes. You say is equals to. Now it gives you the total there, but again, that is written principal. Again, we don't want the principal is equals to. Now there you see, it now writes interest, and it's 61,704.99. There you go. Right, so again, for the last time, 205,000, right, plus minus, that's your PV, then 240, that's your N, 11.5 divided by 12, that's your I, compute PMT. Then you say 1 input for this one, you say 32, shift amort. You go there, is equals to, gives you principal, is equals to, gives you interest, then you end there. So, the first part is this. Now, let us get the interest now. So, the new one, remember, for the new one, our balance was 116,747.22 plus minus PV, and then our I had changed to 15 divided by 12. Our PMT, remember I said I want you to ignore that B version, the one I explained them when I was saying it changed this one. Ignore this one. I wanted to just explain how do we do it if it was in a different version. But for now, I want us to go back to our original question, whereby the PMT is 3,750. 50. Remember 3.8 minus 50, right? And then we did compute our n. So again, I'm going to use both. I'm going to use the HP first now. Okay, so we go 116,747.22, right? So this is plus minus, that's your PV. Then 15 divided by 12, that is your I. Then 3,750, that's your PMT. Then we compute your N, which is the same answer that we got before, right? Okay, now, so your N is 39.6 something, which we said it is equals to 40. Now, we want to know the interest between payment number 33 to payment number 50. But what did I say? You give these new numbers, and the new numbers are payment 1 to payment number 18. So again, you come to your calculator, you say 1 input 18 shift amount 1 to 18. That's exactly what I want. Is equals to my interest. There it is, and my interest is 21,580 point 581. Sorry, 581 because it's 0.99. There you go. Now let's do the same thing again with Sharp. Let's finish this question doing it with Sharp. And as usual, second function alpha 00. So let's go. 116,747.22 plus minus PV. 15 divided by 12 is our I, and 3,050, that's our PMT. And then you compute your N, which we got the same answer as that one. Now you say amount, right? So P1 is already at 1, so it's fine. So you go down to P2, and then you put 18 there, because remember we want 1 to 18. So you say 18, then you say enter. You go down, it gives you the balance. Down, it gives you the principal, and again down, it gives you the interest. 21581. There we go. But remember, in the question, they want from 1 to 50. So what do? We simply add the 2. So let's go. So it's now 61,704.99, right? There it is, plus this one 21,581. Then you get your answer as 83,285.99, which is as good as 83,286. There you are, and your answer becomes option number A. There it is. So this is how you do the bank statement, and this is how you calculate interest between periods or between payments, 1 and 10, 1 and 20. So hopefully you now understand the bank statement, and hopefully you can answer almost any question on the bank statement, and I wish you all the best.